So welcome to the first video of the channel, how to plan your trading week. We're going to go into great detail of everything that we do prior to our trading week. We normally do this on a Sunday. We go in, analyse the charts, pick the best possible opportunities for that particular week, map out all our key points on the charts so we're not wasting any time during the day. Check what relevant news is going to be occurring for that week and make sure everything is as seamless as possible moving forward. But before we get into that video, hit the subscribe button, hit like on this video and click the notification bell because you'll get notifications for videos just like this, and we're going to be very frequent with our content. We're going to be uploading some extremely valuable videos, so make sure you hit the notification bell. First of all, there are many platforms out there to analyse your trades. We use TradingView. We're going to leave a link down below for you to click on that and create a free account. You do get paid versions where you're able to see multiple charts on the same screen, but the free version does everything that you would need right now. And then we're going to map out our pairs. If you're just starting out, if you're a beginner, you don't want to be looking at too many pairs, pick a couple. Pick one or two pairs that you're going to be comfortable with. Right, so the first step in our process is mapping out key areas on the pairs that we like to trade. So if you look on the screen here, let's say for example Euro USD caught our eye. We mark it, click this little toggle here, mark it red, so we know that we're going to be looking at this pair for this week. I know exactly what pairs I'm looking at. I don't need to be looking at any other pairs, and I'm not getting distracted and taken away from any opportunities that's going to make me a lot of money. So for example, if we go into Euro USD, as you can see here, we've already done an analysis. Now I could look at this straight away and tell exactly where I want to enter, what my thought process was looking at this when I last looked at it, and what I intend to do moving forward this week. So for example, we've mapped out key areas that we think are going to be important to look at in terms of getting in a position. So for example here, we mapped out quite a large trend line. There was a key factor once it had been broken for us to maybe start considering for it being short. We also mapped out another key area on the daily chart that represented quite strong resistance. It ties in very well with our analysis. It gives another confluence. So we know that we are going to be looking for a short position here. We've actually drew a third trend line, anticipating another break. And we have also set our stop loss and our take profit ready so that if we do get this break and it does approach this level, then we know exactly that our stop loss is going to be 83 pips, our take profit's 184, and we're looking at a 2.2 return on that trade. So I'm not wasting any time. I'm looking at the charts maybe 10-15 minutes a day, if that, sometimes 5 minutes a day after the Monday of that week, because that is the busiest day in terms of looking at charts for me personally. And then after that, it's quickly just check in, making sure that I've not missed any entries there on out. So I know exactly where I'm going to be entering. If you go over to the left here, you could choose a short or a long position, long being buy, short being sell, and you could literally just choose this, place it on the chart, and then put your stop loss, your entry, your take profit, Command S on a Mac, and then that's saved. You'll have that saved. Control Z to undo. You'll have that saved. So we've got everything saved, everything's mapped out perfectly, and I don't have to be wasting any time wondering what it was I was looking at this pair, if I was going long, if I was going short, if I was looking to avoid this completely. If I was to go through all of these pairs every single week, my head would be scrambled and I wouldn't really know what I was doing in terms of the best possible opportunities to get in for that week. So what are key areas? So if we zoom out on this chart here, as you can see, this for us was a key area. This line here, you can effectively just draw a box. Why is it so key? Well, we've been below it for so long now, all the way back on the 26th of February 2019, and every single time we've got close, it just doesn't seem to have broken resistance until on the 20th of July, we did actually get the breakthrough that we wanted, which then would firmly put us in a bullish trend in our eyes. So that was a key area for us, and then of course this massive uptrend, which then, if we zoom back in, brings us to this part of the chart where we currently are now. Now you can see this is called free drives to a high, so technically what this means is prices starting to get exhausted. There's not enough buyers in the market and the sellers are starting to take. As you can see, the push up is losing strength time and time and time again before we created a lower low and then a lower high, perfectly in line with this resistance, and we have bounced now down to this second trend line that we've drew in. We've had a nice bounce off that once, twice, but then hit this resistance zone again, really struggling to break through. This again is another confluence to tell us that we might be looking at a short position. This is not financial advice, nor are we giving financial advice. We're just showing you things that we are looking at in terms of analysis and what we think are good ideas. So I can look at this chart and I can figure out exactly where I'm going, my take profit, my stop loss. So then when I'm calculating my risk of 1%, I know that I'm wanting to be 82 pips, round it up to 83, so I can work out the lot size that I'm going to be using for that trade. And then you quickly flick through the pairs. Now if you have a few pairs that are, say, pound pairs for example, you might want to get in all three of them. But you don't want to be risking 1% in all three, because if you have extremely strong pound news and you're in a short on the pound, that's going to take you out all three, possibly. So you could either risk 0.5% on each, or my advice to you would be pick the best possible setup. We entered GBP CAD because it was a really nice setup for us at the time. GBP USD also had a similar setup. It's looking pretty good right now, but GBP CAD, that was looking a lot better for us, so we took that position and did not enter them both at the exact same time, just to protect our portfolio, because the more you protect your portfolio, the more money you're actually going to make. You could win 3 trades in a row, but if you lose 4 after it, then what's the point? You want to be winning consistently and making profits. It doesn't matter how many trades you win, it's how much percent you're able to keep on to after winning when you are trading in the market. Staying out of trades is just as important as getting into trades. 1, you can't get taken out of trade at stop loss if you're not in it. 2, you're not paying your broker with the spreads. And 3, you're not going to get caught out by any market traps. You're definitely not going to be susceptible to losing any unnecessary money. And then of course, as you know, we always look at the dollar index. The dollar index is a massive driving factor when it comes to the market. So if you're looking at the dollar index, we want to know, what does the dollar affect? If the dollar is strong, what pairs does it affect and why is it affecting that pair? So if the dollar is strong, typically, now not always, but typically, euro pairs tend to be a bit weaker. The euro would go down. That doesn't mean to say if you're in a buy position in euro JPY and the dollar is weakening, that the euro will still go up. Because you could have an extremely strong yen and it would push the euro down on that pair, if that makes sense. So even though the dollar's going down, doesn't necessarily mean the euro will go up. It's just typically that's what happens. Now you always have to look at the second pair in which you are trading. So if you're trading euro JPY and the euro is strong because the dollar's weak, but then the yen also gets strength, then that might push the euro down along with the dollar. These things happen. It's just another thing to take into consideration. So you also want to be making sure that you know the key areas on the dollar, map out key areas, make sure you understand and study price action. We're going to have a ton more videos on how to read price action. We're going to have a ton more videos on planning key levels in the market, psychological biases and why the market moves the way it moves, how to get in, how to get out. All those videos to come, but make sure that you have everything planned out in place so you're not wasting time. 1, during the week wasting time, or 2, giving yourself decision fatigue. Most people don't really take into consideration you only get a certain amount of brain energy to actually look at the charts. I never understand why people want to be looking at these charts for hours and hours a day. That's how you end up losing money, because 1, if you're looking at a chart for a long period of time you've not entered, sometimes you'll just enter just to get rid of that feeling of really wanting to enter. It's like scratching an itch. You really just want to be in and you just want to be making money. Of course, if you're a shorter term, in and out, say 5 to 10 pips a day type of person, of course I understand you're going to have to be looking at the charts more often. But again, still, if you're doing that, don't be looking at 4, 5, 6, 7, 8 charts. Pick 1 or 2 and be in and out those one or two, because you're not going to have to look at them as much. Does that make sense? So there are a couple of good news sites. We use Bloomberg for the news headlines. It's great for understanding the economics of a particular currency, and you get extremely good news reviews. But for our news, to find out exactly when specific events are occurring, we like to use MyFXBook. Go into the economic calendar, you go home, economic calendar. It's extremely valuable in terms of the information that it gives you. If you go into the economic calendar, it will tell you everything you need to know, the hours and minutes until a certain news event is going to take place. It will tell you whether it's low, medium or high risk. We particularly only pay attention to the high risk news, and then also if you click in on the particular event, I'll actually explain to you what that event means. So RBA trimmed means CPI quarter on quarter. What does that actually mean? The Consumer Price Index released by the RBA and republished by the Australian Bureau of Statistics, blah 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 blah. Exactly, you get the point. You are able to find out everything you need to know. But the main point of looking at these types of news is to make sure that you do not get spiked out of any massive events. Now, I would highly encourage you to go through and find out the relevance of these events. How relevant is an RBA trimmed mean CPI quarter on quarter as opposed to house pricing index, as opposed to consumer confidence? Why is that high and that's medium risk? Find out and do some research as to the certain types of things that you're going to have to be looking at based on the pairs that you're trading. Whatever pairs you're trading, look at the news for that week and make sure that you're not going to be in the markets at a time where you feel uncomfortable. Now, of course, if you're a slightly longer term trader like what I am, you are going to have a bigger stop loss, so you're going to be able to be in these markets and still be able to avoid the spikes. Now, if you are a 10 to 15 to 20 pip trader and you're looking to get in and out very quickly, the chances of you being in a news event are a lot less, but if you are in a news event, there's a lot more chance of you getting taken out of the market. So again, browse this. It'll literally take you 5 minutes, and then jot down all the key events that you want to be looking at for that week to make sure that you're not in those trades whilst the news event happens, unless you're confident that your analysis is still going to be okay after that news event. And also be prepared to be stopped out. We always tell people to put on a trade and expect to win, but be happy to lose. So if you're happy to lose the money, that tells me that you're managing your risk appropriately, and you should always be expecting to win. If you don't expect to win, then there's no point in you even placing that trade. You've done the wrong analysis, or you're getting fear of missing out and you're just jumping into trades that aren't actually making sense. But like I was saying before, it's scratching that itch, it's getting you into the market, and it's feeding your endorphins, which is a very fast way to lose money. So there's not much more to it. I mean, what we do is we literally map out every single part on our chart. So for example, if I was to keep watching Euro USD, I would be here and I'd be thinking, okay, we are getting close to a possible entry point. There are a couple of other things that we could talk about in other videos that we will be looking for before making an entry, gathering all the confluences together to make sure that we do have good reason to believe that this is going to, one, be a good trade to get into, and two, have good chances of going to take profit. But again, we would just go over to the MyFXBook economic calendar. Now, we're on Tuesday right now, Tuesday the 27th. So we would go over and we would have a look. So we're in Euro USD would be a trade that we'll be looking to enter now. We wouldn't be entering today, maybe tomorrow. Is there any high impact news? No. Canadian news. No, yen news. Right, so jobless claims, 4-week average, and GDP annualized. So what we would be looking at here is what it was previously. So minus 31.4%, and it's supposed to get better. Now, if it's minus 31.4% and it's going up to 31%, that is a huge improvement, and that could have massive effect on the dollar. Now, it's expected to go to 31%, but it only goes to 1%. Although that's a massive jump and it's positive for the dollar, it might not necessarily mean that the dollar will actually go up in value. It could go down in value because it's still not as good as predicted. That's one thing that you should always be looking at, is make sure that you're looking at the consensus and the actual based on the previous. So if the previous is minus 31.4, it's expected to go to 31, but it gets less than that expected forecast, then that's negative. That could mean the dollar would go down and not actually go up, even though things are getting better. They're just not as good as what's expected, so it drives the dollar down. So that's something that we would be looking at. So we would be essentially to be getting in a short position. So what we would be looking for is we would actually look for that to be positive. We'd look for that to hit the 31 or above, hopefully, which would mean that's strong news for the dollar. And it would be bad news for Euro USD, because if the dollar has strength, the euro would essentially become weak. So we would expect price action to go in our desired direction. So that's something that we'll be looking at on the 29th. So that'll be Thursday. So we might even be able to get in a position by Thursday. German news, European news, and that's what we would be looking at for this week. So make sure you map out the key areas on your charts. Look at the probability of the chart and patterns that you are trading. Make sure your analysis is on point. Make sure everything is laid out neatly. Make sure that you're able to look at your chart 5 minutes and understand every single reason why you've placed things where you've placed them during your weekend analysis, whenever you want to be doing it, preparing for the week ahead. And then that way you're wasting zero time on making decisions, getting in and out of the market. You know exactly where you're going to be taking your profit, you know where you want to be out if it does turn against you, you know where you want to be in, and you know roughly how much you're going to be willing to lose. You're going to be able to know your stop loss in pips, so then you can put it into a stop loss calculator and work out the exact lot size ready to go for you to place that trade if you do need to get in the market quickly. We're going to have tons of videos like this. We're going to give you everything that you need to know to be consistent and profitable traders in the market. We hope that you get value from these videos. We want to see you do well. There are a lot of people out there who consistently lose money. We're going to put out a lot of videos on psychology, because we believe that's one of the #1 reasons why people lose a lot of their money, is they cannot control their emotions. So keep coming back to this channel, hit that notification bell. You're going to see a lot more videos like this that you're going to find extremely valuable. They're going to help you be profitable in the market, they're going to help you be consistent, and they're going to give you faith that you could one day make this a main source of income and take away the stigma attached to Forex being a scam. Forex isn't a scam. 9 times out of 10 you're losing money because it's your fault, or you've had bad education. You're getting in the markets when you shouldn't be getting in. You're not able to control your emotions, which is not your fault, because nobody is doing a good job of teaching people how to control their emotions. Nobody's doing a good job on teaching people the psychological aspects of how to handle trades based on your personality type and based on how you react to the markets. We're going to keep you up to date with everything you need to know to be a consistent, profitable trader in the Forex market.